Hey everyone, this is Jorrel Santo Tomas, joined by my co-founder
Timothy Carambat, as always.
As always, full name, okay? Like we're gonna do this every time. It's always the full name, and then I'll make a compilation in the future because that's always fun. But welcome to the fourth episode, I believe, of Mintplexity. I did actually record another episode with Watase last week, but I'm trying to do like a interview series so that like the conversation between Tim and I are like the main, I guess, the main canon. I don't know. I guess that's the most accurate way of putting it.
We're going to build a universe? Are we building like a universe? We're going to have the next Mintplexity universe?
Yeah, it's like, the canon, Mintplexity canon. I don't know. We'll see. That could easily change. But anyways, yes, this is episode number 4. I was gone last week in Hawaii, so that is why we're kind of a little week late here, but we have a lot to talk about today, just because there were so many things that happened in the last couple of weeks, as well as a lot of changes on our end that have kind of made us reevaluate everything that we're going to be doing in the next 6 to 9 months. And I think it's just a really good opportunity for us in this episode to kind of dive into some of the other macro movements that we're seeing, and even just the problems, I guess, that we're starting to see pop up that haven't been addressed. Like, we've been seeing the same stuff, same shit every week, basically, same shit different week. Yeah. And it's been like this all the way since like 2021. Like, we have been seeing the same recurring issues that have not been solved or addressed over and over again.
Absolutely.
And we really want, especially in this episode, to talk about it, but also encourage any listeners out there that, who see this bear market to actually go and build some of these fixes, build some of this infrastructure that's necessary to go and actually make this space move forward. So with that, the way we're going to divide this podcast, like I said, always 3 topics, make it very, very easy for y'all to follow along. First, people are probably wondering, why did we go and make the 0% fees thing? We just made that announcement yesterday. And yeah, just like what the ethos around that is, as well as some of the, how the frick are we going to make money? And then second, we're going to talk about DeFi a little bit. I think a lot of folks top of mind right now have been just curious overall about DeFi. And then I think people mix DeFi with the Web3 space a lot, which it is similar, but there's a lot of differences in the way that Web3 is approached as opposed to decentralized finance. And then lastly, we have our beef with Solana as always. And there's definitely a lot of things that Tim has to say.
It's not a beef. It's not a beef. We're not Maxis on anything. It's not a beef. It's like it's a criticism. It's a tasteful criticism, constructive criticism.
Okay. So not beef. It's impossible meat.
Okay, there you go.
Yeah. So it's like it's artificial. It's an artificial beef. There's some things we would like to say. There's a lot of things that Solana does well, but we're kind of
There's some things.
Yeah, we're kind of going cyclical. Yeah. We're going over and over again. The same issues, as we were saying, recurring. So anyways, with that, we'll dive into the first part of this podcast with Tim. We made a very, very big decision this week to completely remove our fees for the core product. So for those who probably, the listeners out there who, they've been following along with us, but probably haven't actually launched anything. Could you explain to them what our old model was, and then what we switched into?
Yeah. So just in general, pretty much anywhere you go on the internet trying to launch a contract right now, unless you build one yourself, obviously, is you would use someone's launchpad service and they would take a essentially commission on your earnings. So it would always be a percentage. So you would go and have a 10,000 token collection. And let's just say it all goes well and you mint out and you earn a bunch of ETH. When you click withdraw on the contract, we would traditionally take 5% of whatever that balance was. And so would other providers. Some other providers go a step further and also take a percentage of secondaries. We never did that. So we were no cost upfront, only primary sales only. That was our old model. Our new model now is totally feeless. The contracts are free. There's no 5% on the primary mint sale. And as it always has been, there's no commission at all on the secondary sales. So now the core product of Mintplex is totally free. And core product, just so people maybe that aren't familiar with our product know what that is. It means you can get a kick-ass contract with all these awesome features that you'd ever need for $7.21 and $11.55. You can also get a one-click mint site that's staying free. If you want to have a custom domain, that's the only paid part. The embeddable mint button that you can put on like Squarespace, Webflow, wherever you have your website already, that is free. So was the Winter integration. And that I think covers, and then there's also all the other like, ERC20 minting features and stuff that's inbuilt in the contract. That's all free. There's no fees at all. You keep 100% of your ETH when you launch with us now.
Amazing. So basically that 5%, which originally like was our big bread and butter earlier this year, it was like the big game changer almost. It was like, everybody was taking, oh my gosh, how much was that? Like some people were taking like upfront, like $500 or something. And then we had a few competitors doing SaaS modeling with contract. Like, oh, you can only access our dashboards if you pay $50 a month. Like,
or they put like an arbitrary limit on the token count. They'd be like, oh, you can only mint up to 1,000 tokens, as if that matters. That like, just so users out there know, like your smart contract, if you have 10,000 tokens or you have 10 billion tokens mintable on the contract, that does not change your cost of deployment. Just so you know, that's a totally arbitrary limitation imposed by people. Just so y'all know.
Yeah, it's all arbitrary. Like token count is arbitrary. Like, yeah. I remember one of the earliest questions we got was like, oh, is there any difference between like, will it cost me more if I have to deploy 1,000 collection versus a 10,000 one? And I was like, no. I was like, straight up, that does not matter. Yeah, that does not matter at all.
That limitation is like if you put in a big like equation on your calculator and the number was over 1 billion, and it was like, oh, you have to pay more to see that number. Like that's literally what the limitation is. Like that's exactly analogous to how that works. So I wouldn't use people that put random token limitations on you. It doesn't make sense.
Yeah, it's. So. I mean, and we get why the model is like that, especially for some folks and some providers that will tank the gas, the gas fees for some of these contracts. But if they're not,
don't even do that though.
Yeah, but most people don't do that. So like, if they don't, then that's pretty much a fake and arbitrary way for them to make money off of your contract. So, but basically, So we're doing this 0% fee thing, right, Tim? So then how do we make money? Like probably users out there are probably like, or people who've been following us for a while and listening to our podcast are like, hey, Tim, Jorrel, this is really great and all. But will you guys even survive through the winter?
Yeah. So for people who are worried about, is Mintplex going to be around? There's some information we haven't gone public with yet, but you don't need to worry about that for at least 2 or some more years. Like you don't have to worry about us going away. That being said, for like how we're going to make money. So we kind of realized that our core product is really powerful. Like people just want a way to get a kick-ass smart contract that has all the features you want, like allow lists and the mint fee and like all these other kind of like interesting minting mechanisms where it's like, first X free or something like that. A lot of people love that stuff. We realized that we have a really great contract, but you can kind of get a contract anywhere and that's okay. And that's fine. And we realized that our core value actually comes from all of those additional tools we offer users. And now everybody, because you can import contracts on Mintplex now, that is actually where real value is. And that is actually the things that help your project be successful. So we realized let's move more towards the services that we offer traditionally with Mintplex Pro. Those will like pretty much anything that's not a core service is going to be right now behind Mintplex Pro. And so that's how we'll make money. If people just want to launch a contract and get the embeddable mint button and that's it, that's great. We love the fact that you're launching with us and we appreciate that immensely. We're not taking any cut of your revenue because, well, it happens to align with the market, but also like it shouldn't have to be paid. We think that service should not be paid in this space because it's essentially commoditized. And we want to enable people to go and take full advantage of the blockchain and not have to worry about, paying a 5% haircut or 2% haircut or even a 1% haircut. You shouldn't have to do anything at all.
Yeah, and I think also to re-emphasize the whole kind of notion of payment within blockchain, you're already paying so much just to go and put stuff on the blockchain. Like us adding another fee on top of that, it's just not the right time for it. Yeah. And so on our end, it also doesn't cost us very much. So it's like,
it's not like users using us or bleeding money from us. Now, that being said, it was important that we had a fee when we started, because if it wasn't for all the people who have launched with us now up to this point, like we wouldn't be able to be at a point where we can confidently sustain ourselves on a feeless model. So
absolutely,
the people who did launch with us are the reason that this is possible. So
thank you.
So thank you, because those early adopters are actually the ones that paved the way to make our tool more open and more accessible for others. So it is directly their contributions that did that.
Absolutely. And so, of course, pending how the rest of the market plays out in the next year or so, Mintplex will still be around. We're not going to be going anywhere, even with the 0% fee stuff. I think usually when they see stuff go free or open source, I think a lot of folks maybe get scared. They're like, oh my gosh, are they going to abandon this project? And the answer is no. No,
the answer is no. I can confidently, this tool will stay online for a very long time. It doesn't cost us really much to run. And since with Mintplex, we're self-service and the user absorbs the gas. And if you're on an L2, that gas cost is extremely, extremely small.
Yeah, it's almost zero.
It's almost zero. So shout out to the L2s. But don't have to worry about that. Just take advantage of the fact that now it's feeless. And if you want more tools to help your project grow or succeed, that's where the pro tools come in. It's a one-time payment right now. And also, if you buy a flight pass, you get pro forever for free for all your projects for life. So, now's as good a time as any. There's not that much supply left on flight pass. So
get on a discount, because our flight pass, especially after the stuff that we're going to be doing a lot of stuff, fellas. Like all y'all out there, we're not going to reveal anything on the pod right now. But as we transition into more of a SaaS type model, and as we do some more of that type of work, going into Q1 and Q2 next year, the flight pass might be a little bit more valuable than it is right now. And
it's going to be extremely overpowered.
Yeah, and it's already really powerful as it is. But oh man, the stuff that we have planned for next year, we're going to be essentially, once again, right, the architecture that we built out and the capabilities of what an NFT allows you to do will allow that flight pass to have a lot more quote unquote utility for some of the future things we're building. So just keep that in mind as you decide how you want to stay involved with all the things we do at Mintplex. But that's basically it. So there's really no more reasoning that it's not anything special. It's not anything like groundbreaking why we decided to transition. A lot of big things just in the whole space in general kind of pushed us to reevaluate. And we're trying to really encourage people to build in the bear market. And this is like the best way. It's like, there's nothing stopping y'all. It's going to cost you this regardless if you develop it yourself, whether you code it yourself, or if you launch with us, it's going to cost the same. Ownership is exactly the same. So go.
You just get a more powerful, battle tested contract. That's it.
Yeah. So go out there, build something, have fun. Anyways, though, now that being said, let's dive into some of the more critical conversation that we wanted to have on this podcast.
Or the news. Yeah.
So there's this tweet that we read today, yesterday that basically was provided by Chainalysis that said that in October, $718 million has been stolen from DeFi protocols across 11 different hacks. That means 11 different hacks happened in the last 14 days.
It says a record month. And it's only October.
It's a record month.
It's like October 14th.
the highest, like the only other comparable time that it was like this, and this enormous amount of hacking as well, was in March
of this year. The entire month of March is now less than 14 days in October of this year.
Yeah. So, what's going on, Tim? What the heck?
I don't know what's going on. Just so everybody maybe has an idea of my skill set. I am not a quant. I am not a good trader. I don't do NFT flipping. Never really got into that. Token stuff I'm not very good at. That being said, maybe I'm not the best person to reference, just so everybody knows where I'm coming from. But being involved in this space now for quite a while, and also just looking at all of these kind of DeFi protocols and DeFi projects that have come and gone, or maybe are still around, but are like 1% of what they used to, Olympus DAO. So a lot of these projects and a lot of these DeFi kind of protocols, in my opinion, the current state of DeFi, the current state of it, just so everybody knows where I'm coming from on this, I do not believe is it's a failed experiment. This is in no way consumer ready. There is nothing that would encourage a retail investor to jump into this space, besides just getting in early and exiting at the top, which the majority of retail investors just wind up doubling down, getting sunk cost fallacy, and then riding this thing all the way to zero. And DeFi right now, just does not have enough protection for people to be able to jump in and confidently be like, yeah, like a piece of my retirement is in a DeFi protocol. Like that is 20 years away at this point.
Absolutely, man. I mean, I think a good way to kind of have this discussion is to talk a little bit about the most recent hack that we're aware of, which is the Mango hack.
Mango market. Yeah,
the Mango market. So could you dive at like just a summary of what happened with Mango, just so that listeners can get a slight understanding of what was going on there?
Basically, so Mango is just kind of like an open market with pairs of tokens that you can buy and sell and take positions on as well, almost like a call option or something to that nature. Basically, without getting too wordy about it, someone used $10 million worth of USDC. They split that 10 million into two accounts, 5 million each, and essentially used their liquidity to pump the price of a token into just on their own orders, pump the price of a token. And then with the other account had that, bought that token before they pumped it, took a loan against it, and then wound up liquidating. I think they walked away with what it was in total 116 million. I think was the number.
116 million. Yeah.
So basically they had enough money, which just to give some perspective, a multi-million, $100 million trade in retail finance, thinking your big companies, like your S&P 500, wouldn't even move the needle, right? That's a regular transaction for institutional trades. But when it comes to these smaller markets, they can easily be manipulated with what is to many an objectively large number. To the market is a crumb, is nothing. $10 million is literally a penny in these large markets. And for someone to be able to do that with only $10 million, that is extremely troubling for DeFi, for someone to be able to manipulate a market at that scale, and then also get a unsecured loan, essentially a flash loan, right? Where it's if you couldn't do that in real life, even if you had $100 million worth of equity in some kind of asset, you couldn't go to a bank and get a loan against that in a day, most likely. Institutional capital could probably get a loan or something like that. But it wouldn't be unsecured and the bank would know who they're dealing with. On chain, it's oh no, I have these assets. See, look at the chart. And then, it was it's basically because that protocol, I think it was SBF had a tweet on it about basically how their risk engine had essentially a flaw in it, where it allowed the price of this token to just, pretty much just asymptote straight up, and they could take a loan against it. Whereas FTX would not have allowed that, because the way that they show price reflection, their risk engine actually takes into account kind of I guess you would say second order motion. So to where it's like, okay, historically, how has it moved over time? And okay, it just jumped up in price. I think it has to stay there. I think they had said their risk engine waits for the price to see about 5 hours to see if that is the true new market price, because otherwise that's just a blip. And if someone has a blip, someone can essentially arbitrage it and then just be like, okay, yeah, it's worth a lot. Look, give me a loan, and then do some crazy shit with the loan, pay back the loan, and then walk away with the cash. And that's it. Like, that's a huge problem. That is a huge, massive problem right now. Like these risk engines and such, like, I don't know, maybe FTX open sourcing their risk engine could help abate some of these problems. They truly have a great product, but that's definitely not going to happen. And obviously also FTX is, not, they're not the angel of the space.
Yeah.
So
I mean, I think even along with that, right? Along the lines of them being able to take the collateral and then being able to essentially liquidate almost the entire DeFi protocol itself. Then they actually came back and then they did the whole governance thing, right?
Oh my God. That was honestly hilarious. Yeah. So for people who are unaware, basically this person stole $116 million or walked away. They basically spent $5 million to make $100 million. They wound up with a lot of the governance token of this kind of like protocol, I guess you would say, or this DeFi platform. They wound up with a lot of governance tokens. They made a proposal saying, hey, I'm willing to give some money back.
It's like 70 million. He's like, I'm going to give $70 million back.
Yeah, they were like, I'll give $70 million back as long as y'all don't pursue legal actions. And then I guess they have a quorum kind of like voting system where it's like, just like the majority of people need to vote. They own so many of the token. They just voted yes on their own proposal, which essentially would mean it's going to pass because they have pretty much all the governance tokens at this point. So they pretty much voted for themselves to pass the governance to not pursue legal actions, which is not how the law works. But yeah, so
yeah, that's not how it works. It's like if you're the CEO of a company and you're like, I've embezzled all these funds because I am CEO and I am also board. You cannot
forgive myself.
Yeah, I forgive myself. I pardon myself from all. It's like, no, dude, you literally stole all this money. That is now the SEC and the Fed's area of expertise.
Wormhole even stopped transactions to stop them from trying to offboard it into any other kind of like currency. Wormhole was stopping withdrawals. And I'm sure they've resumed by now. I'm sure it was only like an hour window. But yeah, they stopped doing it because they were like, oh, they're going to try to exit the system. So.
Yeah, so that that comes into the whole conversation again around, like DeFi being a failed experiment. I would say DeFi in the speculative nature, or I would actually go as far as saying that we're copying the worst parts of Web 2 and importing that into the way that DeFi operates. And when I say the worst parts, I'm talking about like arbitraging, right? Like there's a reason that arbitrage has been illegal in traditional finance systems because of how often it fluctuates currencies and the stabilization of currencies. Because, I mean, gosh, it used to be an entire industry, black market industry of arbitraging currencies against each other, right?
Oh yeah, people do in like foreign currency exchange.
Yeah, and so there's a reason like US dollar was like, hell no, you guys are not doing this stuff in traditional finance here in the US, right? And so there's that, and then like the entire like concept of staking as well, right? And liquidation. Like you're not building just a market, you're building an entire economy, and you're not just like, I don't think people understand that at a fundamental level about like how these protocols are operating. These protocols operate off of like both speculation and making sure that transactions can be maintained, right? And
well, I mean, at the end of the day, they're just doing math. That's all they're doing. They're doing math with none of the protections, which like from an economic standpoint, yeah, like it's just math, right? Like, okay, yeah, supply demand, and like you have these derivatives and all of that. Yeah, that works fine. The problem is that when you have people with large amounts of cash come in, they can move these markets totally independently. Does this happen in the real world? Yeah, absolutely. Somewhere, somehow, someone is doing this. And without a question, it's likely a large bank, right? But as we know, laws don't apply to banks in the US, at least.
Yeah, and you know, and also the banks get bailed out when they do a major frick up.
So but like that's the problem with the current iteration of DeFi is there are zero protections for the retail consumer, which is who DeFi needs to appeal to in order to get mass adoption. Because if retail jumps in, or I mean, I guess I don't know. Actually, is that necessarily true? Because like for the longest time, traditional markets were institutional, and then they've only recently opened up to retail, right?
Mm-hmm.
But at the end of the day, I think like I'm kind of confused on DeFi's kind of target market. Do they need to appeal to institutional? Because institutional is not going to touch it if shit like this happens, right? There's too much risk. And then retail doesn't want to join unless there is a huge upside for them, right? Like, you know, like everything's a GME or everything's an AMC opportunity. You know, so
yeah, I mean, without getting too deep into like historical movements and whatnot, like the stock market has like the reason that it even exists or existed was in order to get outside financing in order to encourage a business's growth. So, for example, I am a standard investing firm, and I'm trying to diversify a portfolio for my clients into companies that need the capital to grow, right? Before, there was no such thing as VCs. There were no such things as, it was all either private equity or the stock market. So you would only use those two vehicles in order to finance some of the things that you needed, like, for your business to evolve or to grow. Before, you would literally ask people to go and loan money to you so that you could go and build your business out. And then you'd end up having to pay them over time. That's really what stocks are. But the issue is that, to your point, right, is that once we open the doors to people to actually be able to freely trade and freely buy in, freely trade options, which before was not an accessible thing about 15 years ago. Actually, not even 10 years ago wasn't even an accessible thing. That's kind of what's happening. And so now a lot of people without any knowledge of how these businesses operate or even what an investment is, a lot of them speculate and try to like quickly make money in the same way that you would, arbitraging. Because that's what essentially people hope for, is like they'll trade on an inverse and hope that the stock goes down and then they make a shit ton of money. You trade hoping that the stock shoots up into the sky, on a put or whatever, right? And then you hope you make money, right? But are they really invested in those companies? Like, do they even know how those companies are operating? Do they even go into a shareholders, quarterly meetings? Probably not.
There's no shareholder meeting for ERC20. I don't know. Is there a shareholder meeting for ApeCoin? Like, I've never heard of it.
Yeah, and even for the so that's the thing, right? Is like all these things, like we haven't even gotten to a point yet where the retail investor understands how to engage properly in the investments, because before, with institutional firms and whatnot, you actually had to pay to put an order down. You don't have to do that anymore. They've, because of Robinhood, everything in the stock market is now 0%
commission free. Yeah, it's commission free.
And so that's basically what ended up happening. And so now you're applying that same concept to DeFi with even less intuition, even less information about whether or not this company is long-term or sustaining. Because it's much easier to understand how a company's doing as they do their, Q1, Q2, Q3, Q4, earnings reports. Like, how that they're doing as a company. But for DeFi, I don't freaking understand what things are being, not even speculated on, just like what the value of that DeFi is. Is it the amount of money coming in? Is it the amount of transactions? Is it all this stuff? And then that fluctuates quarter over quarter. So, and it's a 24/7 market. Right.
Yeah.
And so,
that's also.
So that's the thing. It's like, are we ready as retail investors to engage in this? No. And that's the reason why Tim and I don't even trade on it. Like, we have a couple, I have some money in ETH and Bitcoin, but that's like stuff that I had bought in like years ago, and I've just kind of kept it. You know, I'm not, you know, I definitely bought at a very, very bad time at all of these, but like, you know, it's so anyways.
I never staked any money in Olympus. I know some people that run some crypto companies that they were taking profits of their crypto and putting them in protocols like Olympus, and they got completely destroyed. And like the money that you thought you had is no longer the money that you had. As a business, that's unacceptable.
Absolutely.
Yeah. So it's problems like that. Like, I think that need to be solved first before institutional and definitely retail can jump in. Otherwise, the retail just found another way to be exit liquidity for somebody with bigger bags.
Yeah. And that's, you know, and we actually mentioned this on the other podcast about like people applying DeFi concepts to NFTs, which is exactly why we're in this situation where we have a flood of like useless NFT JPEGs, and it's entirely speculative about like whether
some
that
are going to be quickly, or some that are going to be quickly securitized, and the creators of those projects will wind up in massive trouble. It's one of the reasons that we don't offer staking as a mechanism in Mintplex. It's not because we're lazy, and it's not because we don't know how to do it. It's because we don't want our consumers to accidentally wind up in a lot of trouble. And we understand a lot of you aren't in the United States, and that's fine. But your governing body can just as quickly make a decision if the US body makes a decision, right? Because then there's some kind of guideline to go by, right? They may be like, okay, well, US thinks security. We have a similar kind of model, so it's a security here now. And like you could wind up in trouble, and we just don't want to put people in that position.
Absolutely, yeah. Also, it's just like we're out here trying to build infra, and staking is contrary to everything in that sense, because
no real value derived in staking most of the time, pretty much all the time.
And at any time we can activate it. Like I'm not primarily against staking. I think staking has a place, but you have to justify where value is derived. You have to justify like, okay, if I'm earning an ERC20 token from this, where am I using this? How do I consistently add new money, you know, to my project? How do I add new money to my business? Okay, that's really the big thing here. And so anyways, you know, we talk a lot about like, you know, DeFi being a failed experiment and then all these things. Well, ultimately at the end of the day, and the conclusion here is that a lot of folks really are just getting bombarded with asymmetrical information, or bombarded with loopholes. Really, they're not actually doing anything. I would say that the protocol isn't allowing. It's just that smarter people with a lot of money know how to take advantage of the system, and everybody gets freaking mad because they weren't thinking about those things. They were like, that's impossible. There's no whale that's going to come in and do this. And then the whale does it. And then y'all lost all your money.
Always a bad actor. There will always be a bad actor.
And so that's why it's like finance is supposed to be boring, guys. It's literally supposed to be boring. That's the reason accounting is boring. All right. Like the fact that it's as exciting and you guys are like always constantly on your toes and stuff literally means you cannot sleep at night.
There's a huge risk.
Exactly. Yeah. So that is not a good sign, fellas. Like I like everybody out there listening, the fact that you are constantly holding your bags, scared for your goddamn lives, is not a good thing. Okay.
Yeah.
And so that being said, another thing that constantly has everybody at the edge of their seats, and something that we constantly talk about, is Solana. Okay. Where did Mango happen? Where did Mango happen?
Solana.
Okay. So
which to Solana's credit, like Solana loves to flex their TPS, the transactions per second. It happened extremely quickly. So Solana performed perfectly on that DeFi hack. Like, I mean, those transactions were extremely quick. Y'all should have seen them.
It was so good, guys. It's
network operated. So Solana did a really great job, because that's kind of like Solana's like main kind of like value prop, right? It's like better DeFi, faster DeFi, right?
Yes.
And like objectively speaking, Solana is like just amazing at speed. Like just it honestly is something else. Like for those of you who haven't used Solana and maybe are more familiar with like ETH or ETH based systems, L2s on ETH can be pretty damn fast. Something like Optimism and Arbitrum, like those are really fast. Solana it is fast, but even at volume, so they claim. But it does appear to be true where like you execute a transaction on Solana and like you hardly even have time to click cancel. I don't even know if you can cancel, honestly, because shit happens so quickly. Like I don't even know if you can, to be completely honest. But yeah, it is insane. It is very, very quick, and it is extremely low cost. Like those two things, like they claim, absolutely true. Absolutely true.
Yeah, well, I mean, it's advantageous when you only have 10 servers running your nodes. So
yeah, there's who knows how many validators? I forget the number. I'm sure someone knows the number.
I'm just kidding. I'm just kidding, but not really.
There's like definitely 50. A concern there. There's definitely a concern there. But there's a bigger concern, in my opinion, with the stuff that we work on. So like NFTs, right? NFTs on Solana, right? Magic Eden kind of really paved the way for they are the OpenSea for Solana, right? And then OpenSea came and we're like, okay, we'll support Solana and, whatever, right? Now everybody's supporting Solana marketplaces. I don't know if anyone ever wonders where those NFTs are coming from. And just to give some perspective, I'm not saying where did they come from as opposed to like, who is the project founder? I don't know if everybody knows this, but every single NFT on Solana has been minted using Metaplex's NFT program, which is like, does nobody see a problem with that? Like they take a very small cut of every single minted NFT. And I don't know why nobody sees that as a problem. Now, I'm not saying anything negative about Metaplex right now, especially on this pod. Like what Metaplex is doing is in their best interest. Right? Because they're going to be the people that all NFTs come through and they're going to keep building tools to support and maintain that incumbency. They are just doing what's right for them as a business. Makes perfect sense. But I don't know why nobody sees it as an issue to where it's like, for example, like on ETH, right? Let's say you come to Mintplex, which I know is confusing now because I'm saying Mintplex and Metaplex. But let's say you come to Mintplex, or maybe you go to Manifold or Third Web, right? You can get a contract with a certain subset of features, right? And we have different features from Manifold or Third Web. We all have different contract features. Like we have the minting with ERC20. Nobody else has that. Maybe that's something you need, right? You can come get that with us. And let's say you look at all of the ETH ecosystem and you say, you know what? None of these contract providers have the function that I need. I want to have some weird kind of marketing opportunity where like when you pay for one, you get two. Let's just say that's a thing that no contract provider right now provides out the box. Like you pay once, get twice, right? Buy one, get one, essentially. Just go take a contract, hack on it, add that function, and it's done. You have your function, right? Whereas let's say you want to do that on Solana, you don't have that choice. Like you can only use the functions that exist on the Metaplex contract. You can't go and hack your own Rust contract, which Rust is, I mean, depending on the skill level of a developer, either wildly unapproachable or a super efficient language, depending on who they are. But like the end idea is that Metaplex is the kind of arbiter of what NFTs can do or even be minted as. Like, what is the experience of owning an NFT, of minting an NFT on Solana? I see that as an issue because it stifles innovation. Some of the biggest quote unquote metas in ETH have been a random project doing a drop in a certain mechanism that they custom programmed that later became a standard for all projects to adopt. And that can't happen unless Metaplex says, okay, fine, we'll add that as a function into the token program, which I don't know why nobody sees that as a massive problem, that people can't just go and own their own contract that's custom, has some custom stuff, and just uses their standard. Unless there is a way to do that. And maybe I'm stupid. If someone wants to correct me, please tell me right now that there is a way to have your custom NFT contract on Solana appear on OpenSea.
I mean, it's not just the contract too. It's literally the metadata, right? Like Metaplex handles all metadata in.
Yeah, they help you get all your metadata on chain. Yeah.
Yeah, entirely. Like if you go onto Magic Eden or you go onto OpenSea and you look at like, oh, where's their token? Where's their metadata hosted or where's their metadata readable? It's all through Metaplex.
Yeah, like Metaplex helped take all that metadata and put it on chain so that you can find it on SoulScan and stuff like that. And also for people that want to realize where my tinfoil hat is coming from, It is because Third Web recently launched their integration for Solana, and it works great. We've had some users come in, we've gone and tested it ourselves. It's awesome. Honestly, it's great. The issue is that SDK that Third Web provides is just a wrapper for Metaplex. It's not custom. And like Third Web has very smart people that work there. There are some incredibly talented engineers there. And that's totally evident from the tools that Third Web has already built. They have the engineering ability. So why are they conforming to using Metaplex's tools as opposed to building something totally outside that ecosystem that just works in Solana? It's because they can't. It's because if they did that, people's NFTs won't pop up on Magic Eden. They won't pop up in your wallet. They won't pop up on OpenSea. They have to use Metaplex. I don't understand why there is no talk about why that is not great for the ecosystem. Imagine if every NFT on Ethereum had to get launched on OpenSea or using OpenSea's tools. Like that'd be unacceptable.
Yeah. I mean, and because the thing is, it's like we talked about this in the last pod. A lot of marketplaces are now popping up with their own mechanisms and their own, scrapers, right? So now there's a lot less reliance on OpenSea's Seaport and OpenSea's APIs in order to actually use NFTs in their little like silos, right? So once again, we see a lot of Solana maxis and a lot of Solana folks say, hey, we're pretty decentralized. We're more decentralized than ETH is or whatever other chain they like to compare themselves to. Does that not sound like the most centralized service?
It's a monopoly. And again, let me be absolutely clear. I am saying nothing negative about Metaplex. Metaplex is the definitive reason NFTs even exist on Solana. Like what they are doing is in their best interest. And what they have done is allowed NFTs to exist on Solana, full stop, period. So what they have done is great for the space in Solana, but is the fact that you cannot go outside of their ecosystem and still get all the benefits of using like a marketplace and like other tools that might maybe need to be built. Like that to me seems like a problem. All they're doing is just taking a small cut of minted NFTs. It makes perfect sense for them to do that. As they should, being the ones who enabled the space. But the fact that there can be no competitors, I think is extremely problematic for Solana.
I mean, not just it's not
doesn't
just
allow
Solana
people to be custom.
Yeah, and it's not just Solana. Like think about it this way, right? What is the ethos of Web3?
I mean, decentralization.
Decentralization. So like the fact there's only one place in Solana that you can go to for NFTs. That's a freaking red flag.
Yeah. Like, I mean, and honestly, go to OpenSea, go to the Solana Explore tab, and see all the projects. Click on every single project and in the details, expand it and see the token program ID. Every single one of them have the same token program. Every single one. Yeah. So like, I don't understand. Like, I think it hurts the space ultimately when people can't add interesting minting mechanisms that make their project more alluring. Because basically what you wind up with is a bunch of people all trying to sell their project and their vision, but none of them can do anything unique. Like none of them can be like, oh yeah, no, like we're good. Like, and I know they have some interesting mechanisms in the Metaplex contract. Like you can give people a SPL token and then you can mint with the SPL token for like allow listing. Like that's cool. That's interesting. But like, okay, what if you wanted to do like buy one, get one? Can't do that. What if you wanted to do like discounts or something like that? Like there's a billion other minting mechanisms that exist on ETH that just simply won't exist without the permission of Metaplex, unless they build that specifically for users to be able to capitalize on. I just think that's, and if I'm wrong, please correct me. If I am wrong and just be like, oh no, Tim, you can make a totally custom program and it'll pop up on OpenSea. Please tell me that, because why did Third Web not do that? Because they have the capability. I know they do. They're very, very good at what they do.
Yeah. And also there's a big difference between like creating boundaries and guardrails so that like, people have a certain, simpler template that they can, launch in it. Yeah. There's a difference between that and every single contract being only through one program.
Right.
Just
there's
like,
a difference.
Once again, and we want to emphasize, like, or at least Tim wants to emphasize that, like, we have nothing against these folks. But once again, think about what protocol this is being put on and why they're approaching it in this way. It just makes very little sense overall for the space. So, but anyways, with that, Tim, we'll just leave it at that. We'll let listeners mull over it. We'll let them think a little bit about everything we've said. To recap, we talked a little bit about our 0% fee stuff and where we're transitioning Mintplex. And then we dove into, DeFi and its lovely pros and cons, mostly cons. And then we dove into Solana for a little bit here. Are there any final thoughts, Tim, that you'd like to leave some listeners as we end the 4th episode of this podcast?
No, not particularly. Not anything that I think we haven't already talked about. But I mean, yeah. Also, please correct me if I am wrong on the Solana stuff. I really would like to be corrected on that.
It'd be really nice because then we could figure out some hacky solution for our end of things with Solana.
Yeah, for people to have their own custom contracts, that would be great.
Yeah. My only final thoughts is please use testnet. Again, I just saw a few users this week launch directly to mainnet. Please don't do that. Y'all were the most annoying customers or users to interact with on Intercom this week. Please don't do that. Also, it's like the Shopify plugin too. That it includes the Shopify plugin. Don't go straight to prod with the Shopify plugin, please.
On testnet, it's free. You can use the Shopify plugin on testnet contracts for free.
Use that first, please. There's a reason I am not answering your Intercom message yet because it's the same thing. It's the same issue. You would have absolved this if you had tested on testnet. Please, listeners, test on testnet, or I will literally ignore you. That is I know when you've tested on testnet. I can see it in your contract.
We can know. Yeah, we know if you have tested on testnet. Please test on testnet. You are wasting our time and your time when you don't test on testnet. Please.
Yes.
We want to help, but we want to help when there's actually a problem.
Exactly. And we will have tutorials and stuff coming out soon anyway, so don't even worry about it. You'll get more tutorials to kind of see all this stuff, but still, a lot of these things don't even require tutorial as long as you go through testnet, make sure all your shit works, and we'll be good to go. Yeah. But with that, anyways, thank you so much for listening to the 4th episode of Mintplexity. As always, follow us on all of our social channels if you haven't already, and yeah, just keep following along. We got a lot more stuff going in. We're probably going to change the cadence for both our podcasts and our newsletters. There's just not as much news to talk about every week. So we're going to intersperse it with guests and some more tidbits here and there and tutorialing. So there's always going to be content on our YouTube channel and other places. There's only so much Tim and I can shit on every week. We can't roast everything all the time. You know what I mean?
I don't feel like we're roasting stuff all the time. Maybe we are. I don't know.
That's just us privately roasting stuff every week. So, but anyways, have a good, whenever you listen to this or watch this, have a good rest of your week or weekend, and we will see you in the next one.
All right.
Peace.